When it launched back in 2010, WeWork was the vision of the future. A new generation of freelancers, startup founders, and mobile entrepreneurs who would find business success by swapping their furious coffee shop laptop sessions for trendy co-working spaces with co-founder networking opportunities and free beer on tap. At its height, WeWork had locations in nearly every continent in the world and was valued at $47 billion. It was also forecast to expand into gyms, homes, and even schools. But by the end of 2019, it was on the brink of bankruptcy while its charismatic CEO and founder Adam Neumann had to step down in disgrace. The real story behind what actually happened to WeWork is much stranger than you think, and what's more incredible is Neumann's surprising comeback that looks like it could be a success one day soon. But first, let's quickly go back to how we got here. In 2010, WeWork was co-founded by businessman Adam Neumann and his American counterpart Miguel McKelvey. The idea was inspired by the high amount of empty office spaces following the 2008 credit crisis and the number of freelancers and startup founders created by that crisis. It was a novel and welcome idea that you could rent a desk for as long or as little as you needed while networking with other freelance workers and startup founders with all the amenities you would expect from a modern luxury workspace. By the following year, the company had created WeWork Labs, which specifically targeted young businesses. It gave them not only desk space and meeting rooms to operate from, but promised support for their early startup days. The labs, they said, would nurture new companies and help them grow. By 2014, WeWork had 51 locations in the US, Israel, Europe, and the brand announced plans to expand to every continent on the planet with the exception of Antarctica. This plan for global coverage, it said, would be achieved by 2017. And this didn't seem impossible at the time because the company was worth $10 billion in 2016 and was dubbed one of the most innovative companies in the world. In financial markets, it was known as a unicorn, meaning a rare, once-in-a-lifetime investment. The hype worked. By the end of 2016, WeWork announced it had raised more than $1.7 billion in private capital. But it was also this insane hype that was probably part of WeWork's ultimate destruction. You see, it was essentially a commercial real estate company, but it insisted on marketing itself as a tech company, and this affected the way investors invested. Just like Facebook or Google, it made bold claims to want to change the world and called its office spaces physical social networks instead of, well, an office. They essentially offered a fairly basic desk space rental service and called it a cultural revolution. Neumann pitched WeWork as a cultural movement and ran his company like this was the truth. The We Company had mass away days that were essentially festivals, where drugs and alcohol were allegedly actively encouraged. They had a mandatory work hard, party hard culture where after work drinking was essential for employees. Neumann presented himself as a revered figure, and he was promoted as a genius. With his long hair and enigmatic way of speaking, many saw him as godlike, and the more cultish WeWork felt, the more this comparison stuck. Neumann then bought the rights to the word we and stuck it on everything that he could. Merchandise, gyms, co-living spaces, even schools. The idea was that if you bought into it, you could pretty much live out every aspect of your life under the We brand. But many began to suspect that WeWork, once a co-working space, was fast becoming something resembling a cult. But the truth was much worse. While Neumann's charisma had initially brought in billions of dollars of investment, his wild and unusual behavior soon began to concern investors. He was allegedly frequently smoking and is rumored to have illegally transported marijuana across international borders on the private Gulfstream jet he bought for the company with $60 million of investor money. He would convince employees to take shots of pricey tequila, work 20-hour days, and attend 2 a.m. meetings. And he would convince them to dance to Journey around a fire in the woods on weekend excursions, smoke more pot, and drink more tequila. But investors, already skeptical of the company's nearly $50 billion valuation, were ultimately put off by terms of the stock's listing. This included demands that each share that he owned should carry 20 times the votes of ordinary stocks, and that his wife should have a say in selecting his successor if he dies. Also, complaints began to roll in about his erratic management style and his increasingly outlandish claims that he wanted to live forever, put a WeWork on Mars, and become president of the world. By September 2019, SoftBank, who was WeWork's biggest investor, insisted that Neumann step down as CEO. They claimed to no longer trust his leadership. Also, despite declaring themselves as the next tech firm to revolutionize the world, the reality was that WeWork was just a very basic commercial real estate company. This meant the huge amounts of investments they received didn't go as far as it would if it had gone to the tech firms they pretended to be, because they had all the regular expenses that comes with real estate. Their business model was basically something called leasing long and subletting short. But while you could rent a desk for as long or as little as you liked, WeWork had to pay the whole rent for the space regardless, meaning the company would bleed a lot of cash very quickly. Meanwhile, where that cash was coming from was also becoming a problem. The very public death of journalist Jamal Khashoggi at the hands of the Saudi government was a PR nightmare. This is because one of WeWork's main investors was, in fact, the House of Saud, and this was hugely controversial for a company that presented its brand as liberal and free-thinking. Neumann himself was also becoming an issue, selling stock for his own benefit and leasing out his own buildings to WeWork, which at one point made him both landlord and tenant. But the catastrophic fall began in 2019 when the company began the IPO process, which would have made them a public company. Before the IPO began, they were valued at $47 billion, but after proper and detailed accounting, it was discovered that WeWork was actually only worth $10 billion. The forensic accounting revealed that the company had lost $2 billion in 2018 alone, and it had gone from astronomical highs to near bankruptcy in 6 weeks. The illusion of WeWork then began to unravel further, with several lawsuits hitting the company that year, most of which are related to harassment, race, and gender discrimination. The initial public offering was eventually postponed. Then, Neumann later had to step down as chief executive after a series of increasingly damaging allegations about his personal conduct and eccentric lifestyle came to light. So what happened next? Well, Neumann started by selling his hugely controversial private jet. Next, the company immediately sacked 20 people who were classed as family and friends of the founder. This included Neumann's wife Rebecca, who was listed as a WeWork employee. Then came the job cuts. By November 2019, the company sacked 20% of its workforce, which was about 2,400 jobs. And by the end of that year, Neumann was completely ousted as CEO, and SoftBank, WeWork's main investor, took over control. So what has happened since the disastrous failure of WeWork? Well, Adam Neumann has since put in a bid worth more than $500 million in an attempt to get back control. He tried for several months to meet with the new WeWork executives in order to negotiate a deal to either buy the company back outright or provide it with debt financing. But none of his offers were accepted. And then in 2022, Neumann announced a new real estate startup called Flow. According to the New York Times, Flow plans to offer concierge services to renters and management services for Neumann's properties and third-party landlords, while other reports describe it as a real estate management software that focuses on branded apartments that also wants to launch a digital wallet to store different currencies, including crypto. The website is very confusing and seems to offer very expensive private rentals in the Florida area, but of course it wouldn't be a Neumann project without presenting itself as a wellness and lifestyle brand revolution that will change the world for the better. It has already received a $350 million investment from a venture capital firm called Andreessen Horowitz, and according to Wikipedia, the company already has 150 employees, so only time will tell if this could find success where WeWork found failure.